we've got to review some action this week. First of all, though, let's have a look at how the portfolio's done. It's been a poor week. We're down 2.6%. And if you think about the last 3 weeks, we had a hit to our performance. Then we had a bit of strength last week, but down again. And we are now at the total return level, only up 7.2% since we started, which is clearly disappointing when we were up over 10, but it's actually still a remarkably good performance since we started this portfolio in week 6. So 7.2% in 14 weeks is a pretty good performance. And when we look at where our performance has come from, quite interesting to see that the India performance is up again. When everything else is down, India goes up. It sounds like a very good diversifier of risk within our portfolio. Cash and gilts, not too bad at all. And on the negative side of the ledger, the Van Eck Crypto and Blockchain Fund down another 14%, so only up 6% since inception. The only saving grace for us is we sold half of our holding, if you remember, when it was up 50%. So we'll forget that, as we heard last week, supposedly connoisseurs are better than raiders. But actually, in this case, the raider would have done significantly better than the connoisseur.
The 5 different behaviors of investors, 3 that you don't want to fall foul of, and 2 which are the perfect roadmap to long-term returns.
So then we've got the Nikkei, which had a dreadful week as well, and that was down 5% in Japan, and the Russell 2000 down 4.3%. And therefore, we've got some hits to our performance there, but overall, we're still looking good as long-term investors.
I think it's actually worth looking at the total return since inception at the moment, because there is staggering differences in the performances of some of the areas. For example, our best performer now is gold, up over 23%. Then we've got copper and the World Mining Trust, all in double digits. So it's really those commodities that have performed for us. Then we've got the Nikkei, despite weakness this week in particular, still up 13. But what about those underperformers? Well, it is the Vanguard FTSE 250, but we put that in as a kind of late entrant. The Russell 2000, another one of our additions, is down 1%. But the S&P 500, for all those that think the S&P 500 is the only thing to ever invest in, we have, since inception, we've only seen a return of 4%. And that tells you the huge difference that you are seeing in the other opportunities that this podcast is designed to highlight, rather than this idea that S&P is the only option out there.